Good evening and welcome to Stock News. I'm Leo, and tonight we're diving deep into one of the most debated stocks in the market, Palantir Technologies, and exploring why many believe it could be the ultimate FOMO stock. In recent weeks, Palantir has captured significant attention with its outstanding Q4 performance, where the company reported adjusted earnings per share of 14 cents and revenue of $827.52 million, surpassing consensus estimates. Total revenue grew by an impressive 36% year-over-year, with government contract sales rising 45% to $343 million. These robust numbers helped catapult Palantir's stock upward, fueling investor excitement. However, amidst this strong earnings performance, skepticism remains. Notably, the ARK Innovation ETF, led by Cathie Wood, recently offloaded nearly 5,500 shares of Palantir. This move has led some to argue that the stock may be priced for perfection, and that any deviation from stellar future results could lead to a sharp correction. Yet not every expert is abandoning hope. BofA Securities' Mariana Perez Mora reiterated her buy rating and even raised her price target from $90 to $125, stating that 2024 was only a dress rehearsal and emphasizing that Palantir sees a world ripe for an AI and technology revolution. The concept of FOMO, or the fear of missing out, is particularly relevant here. Palantir's market behavior has shown an upward bias. For instance, statistically speaking, a position entered at the beginning of the week has a 55.51% chance of rising by the end of the week, and over a 4-week period, the odds remain around 53.57%. More strikingly, whenever Palantir posts a double-digit gain in 1 week, the likelihood of further gains in the following week jumps to 60.71%, and even higher, 65.38% over 4 weeks. When the weekly gain reaches 20% or more, the odds of continued upward movement can soar to 80%. These numbers illustrate the magnetic pull of FOMO among investors, driving momentum that can create significant short-term rallies. However, while the frequency of upward moves is high, the magnitude of those gains tends to moderate over time. Data shows that following a double-digit weekly gain, the median return over the subsequent 4 weeks is around 7.83%, which is lower than the 15.33% you might expect if the stock were driven solely by stochastic processes. This suggests that while investor sentiment is driving frequent rallies, the intensity of those rallies may gradually fade. For those considering an investment in Palantir, it's crucial to adopt a sensible trading strategy. Although many might aim for a psychologically appealing target of $120 per share, a more realistic approach based on the data would be to set a target somewhere around 114 to 116 over the next 4 weeks. With the current market dynamics, this moderate target accounts for both the strong underlying momentum and the eventual cooling off that typically follows periods of extreme bullishness. In summary, Palantir's recent earnings have been impressive, and the stock's robust growth, particularly in government contracts and its expanding role in AI, has driven a significant rally. Yet, the inherent volatility driven by FOMO and the cautious signals from major investors like ARK Innovation suggest that while the stock is primed for continued gains, investors should proceed with a balanced strategy. Whether you're a long-term believer in Palantir's AI-driven future or a short-term trader looking to capture market momentum, understanding both the potential rewards and the risks is essential. Thank you for joining me on Stock News. I'm Leo. Stay tuned for more in-depth market insights and have a great evening.